Welcome back, and thank you to Minister Stewart and Tom for their chairing of their panels. We're now looking at the final panel. This is going to be addressing the enabling environment, looking at regulation and technology. At the end of the day, the ability to access and attract capital to domestic markets and economies is dependent on regulatory and policy environment. So who better to chair this panel than Catherine McGuinness, who's the Policy Chair for the City of London Corporation. Alongside Catherine, we'll have Connor Donaldson, who's Head of Implementation at the International Association of Insurance Supervisors. He can tell you about what we've done well in the UK and what other regulators and policymakers can do to make their domestic economies more open and adaptable and resilient by creating the appropriate enabling environment. We also have Nigel Brooke, partner of Clyde & Co, a leading law firm doing some very interesting work on sustainability and resilience. Last but not least, we have Matthew Moore, who's the President of Liberty Specialty Markets and Chairman of the London Market Group. After this panel, we will hear from James Cameron. James is a friend of COP26 and a senior advisor to the UN Climate Change Conference. And he's going to share his insights into resilience and take a forward look at COP26. James is a fantastic speaker with a long history of working on climate and public policy. So it's always going to be interesting to hear what James has to say. After James, we will have a sum up and some closing remarks from Susan Caldwell of Department for International Trade. As before, all this content will be available on the event website after 24 hours, and the networking lounge will remain open. That's the last you'll hear from me. I hope you've enjoyed the event, and I'll hand over to Catherine McGuinness and James for these final sessions. Thank you.
A very warm welcome from me, Catherine McGuinness, Policy Chair at the City of London Corporation, to this session on the enabling environment, and I'm really pleased to be moderating this panel. Over the past 2 days of the conference, a number of points will have emerged. The fact that risk is increasing, and a key factor in this being climate change and the natural catastrophes and environmental stresses which we're seeing, which are creating new risks, acting as a threat multiplier and increasing the impact of existing risks. Secondly, we'll have been seeing how resilience and adaptability lessens the devastating effects of loss for communities and speeds their ability to recover. And crucially, thirdly, we've been seeing that the protection gap is proof that communities across all countries are more vulnerable than they need to be to risk. The insurance industry, together with the wider finance community, technology and infrastructure providers, are, however, increasingly coming through with solutions to address this protection gap, and we're going to be hearing a bit more about that as this panel goes on. And really the big question is this question of resilience. It's rightly set to be one of the key words of 2021 as we become ever more aware of some of the uncomfortable protection gaps which don't respect borders. The pandemic has uncovered many hidden risks, and our responses to pandemic have generated new risks, in particular the cyber risk to online business models. But as I said at the beginning, one of the key and enduring risks that we all need to address will remain around this question of climate change. Insurance and related industries are uniquely placed to help smooth the transition to net zero. Firstly, by supplying the data and the analysis to cost the risks and inform decisions by businesses and governments. Secondly, by providing the products and services to close protection gaps and mitigate climate risks. And it's really exciting that there is so much thought leadership on these topics in the UK. And in the year that the UK is hosting COP26, a really major COP, I would suggest, in Glasgow this year, we feel that this conference and campaign gives us great opportunities to showcase this capability to global audiences. So in this panel session, we will be touching on a number of areas. We'll be touching on the needs of domestic economies to enable resilience. What signalling mechanisms can insurance provide for corporates, government and others? And how can capital be provided across the financial system? And how should industry align with government and consumers? How best to utilise the abundance of skills and academic institutions that we have, and the regulation that's been put in place globally and at country level to encourage financial institutions to commit to the right processes. We're also going to be touching on the position of London within the resilience framework ecosystem. As the world's most concentrated insurance centre, London clearly has a central role to play. And building awareness of that ecosystem and what it has to offer is critical. It's critical to accessing the services which London has and building partnerships to deal with, to cover, to help build a bridge across this protection gap. Now, I'm really pleased with the panel that we've got assembled here today to contribute to this discussion. We're joined by Matthew Moore, President of Liberty Specialty Markets and Chairman of the London Market Group, Conor Donaldson, Head of Implementation at the International Association of Insurance Supervisors, Nigel Brooke, Partner at Clyde & Co, and Kaveri Bhattacharya, Associate Partner at EMEA Insurance and Sustainable Finance Leader at Ernst & Young. I'm going to give each of them an opportunity to introduce themselves more fully now so that you learn more about them. Matthew, can I start with you, please?
Yes, thank you very much, Catherine. I'm delighted to be here. Absolutely. So I'm wearing two hats today. One hat I'm wearing is as the President of Liberty Specialty Markets, which is a specialty insurer and reinsurer, part of the Liberty Mutual Group. The business I lead is an international business with a very big presence in London, but also throughout the major international markets around the world. And then for a year now, I've been very honoured to be the chair of the London Market Group. Now, the London Market Group is a really interesting organisation because it represents the principal stakeholders in the London insurance market. So that's the brokers, That's Lloyd's of London and the Lloyd's businesses, and also those international insurers which are in London but not part of Lloyd's. So it's a very privileged vantage point to talk about the unique ecosystem of London market insurance that I'm sure we will touch upon later. Delighted to be here.
Thank you very much. And Connor, perhaps I can hand to you next.
Perfect. Thank you very much, Catherine. I'm also honored to be here. Unfortunately, I only have one hat, but hopefully it will be sufficient for the discussion. So I work as the head of implementation at the International Association of Insurance Supervisors. For those of you who don't know the IAIS, it is a global standard setting body for insurance supervision. We are active in setting standards that guide regulation and supervision of insurance around the world. We have approximately 140 different jurisdictions that are members of our association, representing approximately 200 plus insurance supervisors. The IIS has identified climate risk as being a key strategic risk for the insurance sector. We spent a great deal of time over the course of 2017 and 18 developing a new strategic plan to guide us over the course of 2020 to 24. There we identified climate risk as being integral to positioning the insurance sector and the role that supervisors have to play in the conversation. I would say, though, that one of the things that was most remarkable about the course of 2020, as all of us were struggling to respond to the pandemic, what we recognized was that actually climate risk remained front and center in the conversation. The business of resilience remained front and center, and sustainability as a thematic area for the IIS. We didn't lose focus on that. It is recognized that this is something that is going to continue to be a key strategic focus for us. And it also is important to recognize that of all the trends that we're seeing within the insurance sector, I think climate risk and sustainability probably have the greatest likelihood of shaping the industry for the years to come.
Lovely, thank you very much. Nigel, perhaps you next.
Yeah, so I'm partner at Clyde & Co, an international law firm, and about half of our practice is devoted to insurance and reinsurance, and that's where I sit as well. Big speciality in reinsurance, but also direct. And also then head our resilience and climate risk practice. We've been doing a deep dive into both areas, the way that, particularly from the insurance perspective, the way that insurance can help to make the world more resilient, and also to accelerate the transition to a net zero economy, but also the climate risks inherent in all of that, taking various number of shapes, and which we've been talking to clients extensively about that, and we've got a new paper coming out tomorrow.
Lovely, thank you. And Catherine, perhaps you could introduce yourself.
Thanks, Catherine. Yes, of course. First of all, thank you for having me. Delighted to be here. I'm an associate partner at EY, so Ernst & Young, which is a global consulting firm. I sit in the financial services sector of the firm, and my role is that I lead sustainable finance as a solution across EMEA for the whole of insurance. I also, like Matthew, have two hats. So I am also the co-global lead for climate risk in terms of the risk solution for climate risk, not just across insurance, but across insurance, banking and wealth and asset management. And my background essentially is in systemic risk, which is why, you know, over the years I've become more and more involved in working on climate risk.
Thank you very much. So as you can see, we've got a great range of experience and knowledge here to, for us today. So I'm going to start with some questions, but do please think what questions you might want to ask as well while we have the panel here. Let me start, if I could, Nigel, by turning to you and ask you about some of the insurance products that can help cover the protection gap. Perhaps some examples and also some thoughts what else the insurance industry can contribute to resilience and to transition. Thank you.
Okay, So picking up that theme, I think it isn't not just products, so they're front and central, but it's also the wider methodology and thinking that insurance brings to the party. And I think there's been a transformation which I think isn't widely understood outside the industry in the last 20 to 30 years. The sophistication now that's brought to bear in assessing these larger systemic risks is just transformational. So it's risk modelling and mapping in particular has developed into a real fine art, and it's just changed the way that the industry works and the way it prices and its appetite for risk. In terms of products, the London in particular, but the insurance industry in general has been pretty innovative. So, for example, just something very topical this week that's just been announced, Lloyd's has partnered with a startup called Bounce to offer affordable earthquake cover in New Zealand. So this is alongside established insurance products. It's a novel way of doing it, making more affordable, and also rapid payouts because it's based on objective criteria. In fact, government data, which is again touches on another useful point that insurers have this wider role. And but it's a range of products like that, including products aimed at developing markets, a lot of which there's a lot of good thinking being done there, and how to make these products more affordable and to make best use of the data that's available. But there's also a huge amount of work being done in developing the data itself. So, for example, there's been a platform that's been going for about 8 years now called Oasis. It's just had another round of funding from the insurance industry, and they're actually developing open source risk modelling. So trying to democratize risk modelling, bring down the price, and so that it can be used in a wider variety of ways. And this, I think, is where the insurance industry can play a much wider role. A lot of this thinking, a lot of the way you interrogate this data, extract useful information from it, can actually be used by governments, by planners, and so on. You could, for example, if you're working out how to deal with longer-term climate threats like rising sea levels and so on, this methodology could help you work out, prioritize your spending. What is it? What's the best way of tackling that? What's the most cost-effective way? And it just changes the thinking. What's the return period on this? A particular storm surge event, for example, and therefore how high should the seawall be? Just basics like that. But a whole variety of other scenarios this can lend itself to. Also, in terms of speeding up the transition, this is where I think insurance could help identify, price, and then take on risk, which itself might unlock investment and finance. Maybe there are impediments that insurance can help to unlock. And so working together with the rest of the broader financial services industry, I think that's happening now. I think that's really powerful.
Thank you. And it leads me very naturally to turning to Connor and asking you, Connor, how insurance can provide a signalling mechanism for corporates, government, and so on, and to help provide capital across the financial system.
Well, thanks, Catherine. And absolutely, I think that when we think about the position of the insurance sector vis-a-vis some of the emerging trends that we're seeing associated with the changing climate, I think it's important to recognize that really there is an unbelievable wealth of expertise and knowledge that sits within the insurance industry. That's I think an incredibly valuable resource in terms of helping to guide our thinking in terms of how we address climate risk and really actually begin to have an understanding of how climate risk is going to affect other parts of the real economy. And so one of the trends that I think is on the horizon for us as a community of supervisors in industry is that the industry is incredibly well positioned to be able to guide thinking around how to assess climate risk in terms of investment decisions. And I think fundamentally what we can see there is the opportunity for that climate risk assessment really coming from the insurance industry, who really, one, have a vested interest, of course, in seeing sound risk management practices in terms of the risks that they're insuring, but also in terms of helping to guide and inform other credit related decision making within the broader economy. I think it's important that we recognize that capital allocation and credit allocation decisions over the coming years are going to need to be increasingly informed by how climate risk is materializing. What we've, I think, come to recognize within the IIS is that we also have a perspective of looking at this from how well insurance risk is, or how well insurers are managing the risk within their own balance sheet. And what we've seen is a number of jurisdictions starting to identify climate risk as a material risk, and of course then seeing it included within micro-prudential tools such as own risk solvency assessments. I think also what we're seeing is that there's an increasing recognition that there has to be some element of a climate lens that's applied to the prudential framework more broadly in terms of how supervisors are looking at ways in which climate risk and how it materializes is going to potentially stress insurance companies, and making sure that insurance companies are well prepared for that. So we've seen a lot of interesting work being done by a number of supervisory authorities, and I think primarily one jurisdiction in particular should be commended for the work that it's done, the Bank of England with the Prudential Regulatory Authority, in terms of looking at climate stresses and how that affects the solvency positions of insurance companies. I wanted to just close by offering one personal observation, and that is that I come from Vancouver, from Canada, and one of the increasingly discussed parts of how the climate is changing within that part of the world is that effectively we have 3 seasons instead of the 4 that I think all of us were quite used to, and that is we have freezing, then we have flooding, and then we have fires. And these 3 Fs, I think, are a hallmark of some of the challenges that we're going to face across the globe in terms of thinking about the ways in which climate risk is going to affect the real economy and is going to affect the insurance industry. So I think it's critically important that we think about ways in which the supervisory community can work with the insurance industry, work with the insurance sector to ensure that insurance is really in a driving seat in terms of how these conversations are evolving, and the expertise that's been developed within the insurance industry is coming to bear in terms of how we think about these risks and making sure that these risks are being appropriately managed, and that we benefit more broadly across the financial system and within the real economy of the perspective that insurance companies can bring in terms of how climate risk is going to materialize around the globe. So thanks, Catherine.
Yeah, thank you. You raised some really profound points, which I hope we can explore a bit further. And let me just encourage the audience to put your questions into the Q&A box. Let me turn to Kaveri, and again, a natural follow-on, I think. What do you think the role of insurers is in enabling the transition to a greener economy and building resilience? And can you comment on what regulation we need to enable this at both global and country level? Thank you.
Thanks, Catherine. Yes, I think, making the transition work will really be about adaptation, post-disaster recovery, resilience, and of course, risk mitigation. And that's where insurers will be absolutely critical. Insurers have 3 important levers here. It's the assets they own, the policies they write, and then the claims and settlements they pay. So each one of these enables insurers not only to improve their own emissions, and by that I mean reduce their emissions, but also to drive transition in relation to their counterparties, the corporates who they provide cover to, and actually also their customers. So, for example, if we take each one of those in turn, so let's look at assets and investments, for example. That could mean engaging in a higher level of impact investments, for example, conducting a deeper level of engagement with counterparties on an individual counterparty level to really understand and support those counterparties in their transition plans. And that could mean, for example, understanding where the progress has been made in those counterparties towards transition, and if it continues to be made, investments could continue to happen. If, however, there isn't sufficient progress, that could be the point at which insurers consider whether to divest of that particular counterparty. You also have, the ability of insurers to step away from the highest emitters, and we've seen that quite often across the global insurance market, where we see certain market leaders stepping away from coal manufacturing, for example, as just one of the sectors. And then there's a more positive side to the asset piece, which is really taking positive climate action to invest in clean energy. So this is not just about what we no longer do, but it's about the positive affirmative action that can be taken for assets. So that's the first one in terms of assets. And then for underwriting, the same sort of themes apply, but obviously with an underwriting lens. So, for example, we see insurers underwriting a greater proportion of clean energy, for example, engaging in underwriting renewables, potentially no longer providing coverage to the highest emitters. And importantly, similar to the investment side, beginning to engage with corporates to support their decarbonisation journey. And then the third lever, which we've already heard about today, is in relation to claims. And this goes right the way through to the supply chain. So, for example, how houses are rebuilt sustainably, how cars are replaced to support the transition. So, this is not only an insurer's own business. Insurers here have an enormous opportunity to be the stewards here in the transition for the economy as a whole. So maybe if I can just turn to the regulatory part of the question. And I think it's fair to say there is a wall of regulations, so I won't I won't talk to every point, but maybe just at an overarching level. At a global level of governance, we have the TCFD, so the Task Force for Climate-Related Disclosures, and that has 4 key blocks, so climate strategy, governance, risk management, metrics and targets. And many insurers have already developed their TCFDs. Others are in the process of doing their first drafts. Interestingly, we see a number of different economies and regulators taking the shape of the TCFD and the requirements of the TCFD and applying it to local requirements. So in the UK, for example, we have the Supervisory Statement 319, which requires UK authorised insurers to address the core components of climate risk. And similarly to TCFD, splits it into the blocks of governance, risk management, scenarios, disclosures. And much of this can be rooted in existing regulatory frameworks, as Connor was describing earlier, the author, the risk appetite, Pillar 3 disclosures. And the key is that all of these will require material enhancement to really incorporate climate and ensure that firms are able to take appropriate action. And the UK regulator in particular has gone one step even further than that. And we have the Climate Biennial Exploratory Stress Test in the UK that applies to insurers and banks. And the ask is really to address the same 4 blocks that we've been talking about around governance, risk management scenarios and disclosures, but in the context of specific climate scenarios. So, in summary, these regulations provide a great foundation for insurers to enable transition, but insurers will actually be the vehicle for these transition solutions, because the focus is both on risks, so how we identify, measure, monitor the risks, how we price and disclose those risks, and then also the opportunities that I was referring to earlier. So, huge demand for green products. So I think, in summary, the insurance sector as a whole has an opportunity to support the real economy here in the transition in a very material way.
Thank you very much. And Matthew, turning to you, how has the insurance industry evolved? Can you speak to some of the insurance solutions for resilience which are being developed?
Sure, I'll try to. I mean, after 3 such sort of lucid analyses from from the gang here, I feel a sort of weight of responsibility, both in terms of the opportunities and the responsibilities of the insurance sector. So I'm just sort of musing that, I used to sit on panels like this 3 years ago and have conversations about the relevance of the insurance industry, that there was a sense that it had sort of declined in terms of financial services industry, in terms of wider business, society, economy, etc. And now, for reasons that we all understand, it's become, I think it's fair to say, front and center, which is, as Kabari has said, both an opportunity and a responsibility. So in that context, has it evolved? Well, I'm not sure quite where it sits on that sort of ascent of man diagram of the going up towards a full sense of evolution. I think it's evolving rather than has evolved. I think, again, listening to the very good conversation that we're having, there's this sense that simultaneously 2 things seem to be true. And the 2 things that seem to be true, on one hand, insurance is, through its modeling, through its data, through its risk, through its pricing, through its ability to access capital, talent, through its ability to do all sorts of things, and we'll maybe talk about how where London fits in that later, is uniquely well placed. And yet, as the introductory comments said, still globally, there is an insurance gap, there's a protection gap. In terms of what actually is being achieved for real people in real time right about now. So I think what we're really trying to, in a sense, the sense of this conversation is getting from having all the right ingredients to be able to bridge that gap. And that, in a sense, that might be the definition of evolution and what that looks like. And how is the industry, how is the UK, how is London insurance evolving? Perhaps 2 or 3 areas to touch on briefly to throw it back open. I mean, Nigel briefly talked about product. Yes, there is, there's a higher quality of focus on the product solutions for the insurance industry. And really, historically, the mechanism for this was that insurers would, if you like, manufacture product, and then brokers would distribute it, and then the customers were more or less pleased with what they got. What's actually happening now, through my lens, both in my own business and through the London Market Group, is that we're getting a lot closer to customers, because they are changing. This year and the year before, just the technological advance, the society advance, the social media advance, the expectations from their own customers, from their own suppliers, for their own interconnectedness and complexity of risk, which means that we've got to get very close to them, because their needs are changing. And the point of relevance I raised earlier, if we're going to find those opportunities and find those roles and find those responsibilities, what does that look like? Well, some of this is at an early stage. It's at an early stage, but we're thinking more about supply chains, complexity, global interconnectedness. We're thinking not just about cyber risk, which is hugely important in terms of resilience, but we're thinking about cyber risk management, we're thinking about reputational issues associated with cyber. We're clearly thinking about climate change, and that's a huge subject of its own, and perhaps we can come on to that later. Particularly, again, Nigel raised this issue of, at some level, to solve the huge and complex and vital and necessary problems the insurance industry needs to solve. No one party can do it by themselves. Even at my own most megalomaniacal within my own organisation, do we believe we can do anywhere near that? And that's going to be a conversation around how the insurance industry faces off to business, to finance, to academia, to the rest of the city, both nationally and internationally. So I think that if you like, the whole richness of the topic is allowing us to be more evolved. So there's some more product, there's definitely more products and more conversation with our customers, which is evolving. Importantly, there's more capital being raised. I think this is a kind of really, maybe we overlook this because it's so elemental to what we do, but this at its heart, insurance has so much value because it doesn't just price the risk and understand the risk, it raises capital to face off with that. And again, London, the UK, the insurance industry has shown incredible of its own resilience in raising capital to do this, and will continue to do so. So I think, have we evolved? No, because otherwise we probably wouldn't be having exactly this conversation. There's still a gap, and there are gaps and work to do. Are we evolving? Absolutely. And I think we're evolving in London more than any of the hubs around the world, which I'm also closely engaged with. But there is something about the uniqueness of the London ecosystem that allows us to face off to that in a more advanced way.
Yeah, well, there's a lot there to unpack, and I'd love to explore that London question in a second. But on the question of capital raising, traditionally there have been silos, I'd suggest, at insurance firms between the risk analysis for policies and then managing their own assets. Any suggestions from the panel on how insurers can better bridge those internal gaps? Does anyone want to come in on that for me? I don't see any immediate volunteer.
Well, yeah, I mean, I'll give it a shot, being the insurer on the panel. I mean, at our enterprise level, we have increasingly more connected conversations between the two different sides of the balance sheet, including but not limited to energy transition conversations. And I think there's clearly more work to be done there. Candidly, it's difficult, when a customer comes, when a capital raising opportunity comes, the insurance risk management piece can actually be significantly different from the capital raising part. So it's something which we are committed to do. We're committed to doing it more, but I can just tell you from the bumps and grazes that I have had doing this over a period of time, it ain't easy.
Just briefly supplement that with a comment from the outside that there has been this historic siloing. Obviously, the two parts have to look at matters differently. There are much more constraints on the asset side for general insurers than are on the underwriting side. And so the range of assets that are allowed to invest in is much narrower anyway. There are moves to try to loosen up a bit, especially for infrastructure investment. But I do get the strong sense that partly driven by regulation, but partly just by what's going on out there, there is an increasing convergence in the way that climate risk is assessed on both sides of the portfolio, risk and opportunity that it poses, and the energy transition poses.
Yes, maybe if I could build on that. Completely agree, Nigel and Matthew. In terms of how we see insurers taking a consolidated view of assets and underwriting, it's very much focused on the sectors to begin with. So what are the sectoral exposures? And I mentioned earlier coal, for example, obviously the energy sector subdivides into many subsectors. So, coal might be one of them. You might look at certain types of oil drilling, for example, as another. And once you start taking a sectoral view, both of your assets and your underwriting, it becomes a little bit easier to then say, well, this is the stance that we'll take in relation to this sector. And then to the point that Matthew was raising earlier about getting closer to customers, I really, I really think that's the way forward. So a deeper level of engagement with counterparties on the asset side and customers on the underwriting side is really what will help insurers take a uniform, consolidated view.
Connor, anything you'd like to add on this?
Yeah, and maybe I'll shift the focus a little bit, and this will maybe bring in a bit more of the regulatory perspective on it. And from where we sit, one of the things that we've seen a lot of progress on is on the disclosure side. There's still some big challenges ahead of us. Common taxonomy, some of the data gap challenges. It's very good to see the progress that's being made within the industry in terms of looking at climate risks, understanding how they're working their way through on both sides of the balance sheet and taking a more holistic view. But I think that one of the big challenges that is still out there is on the disclosure side. And I think this is increasingly important when we think about it from market participant perspective, because I think it's important that we get to a place where market participants can make informed decisions about how climate risk is being managed within a firm, how these decisions are filtering through both on the liability as well as on the asset side. And so the IIS has been quite vocal in our support for enhanced disclosure regimes. We think it's an important piece of the picture, but we think that it's important that we look at this from a cross-sectoral perspective. So we've been supportive of the work that's being done by the IFRS in terms of developing a sustainability standards board. We think that progress in this area is going to have a very important effect, and I think it's going to help us drawing out some of the important work that's being done within the sector to make sure that hopefully we can be within a leading role in terms of thinking about disclosures and making sure that they're appropriate, that they're comparable, and that they're consistent.
Thank you. And on this question, Kabari, would you like to comment? And indeed, would you like to give us an indication of your key future ask of governments and regulators to further enable insurance to support resilience? Any thoughts on that?
Well, I think, the more harmonisation there is, the easier it will be for insurers, because, increasingly, whilst it may be that some countries will proceed at a faster rate with regard to, for example, we talked about stress testing earlier and the climate biennial exploratory stress test from the PRA in the UK, and we see the ACPR in France about to go through the next round of their stress testing as well, and in Singapore we've seen some requests come out. I think the more harmonisation there is, the easier it will be for insurers, because many insurers have global operations rather than single country operations. So that would be one aspect that I think will help insurers. And the other is the point that Connor was making around data. So, the greater the requirement for disclosures, I suppose, the more we'll see. We've heard Mark Carney talk about how greater transparency will support the transition. And I think that has to be the case the world over. It applies actually to every single sector. The more we know about each sector and the way in which counterparties and corporates are going to transition, the more meaningful climate action each company themselves will be able to take. And at the end of the day, it's about the actions we take.
Thank you. Do either of the others want to come in on this question? Nigel, any thoughts? What would you like to see from governments or regulators?
Well, something which does involve governments and regulators, but sort of tangentially, would be data and the interrogation of data. I suspect we're going to see we're already seeing it, exponential growth in the volume of data being created around the world. And I think that that's going to accelerate rather than slow down over the next decade, and in particular in this area where we are approaching, I think, greater and greater transparency, and that takes a number of forms, including pressure from stakeholders. So regulators are one stakeholder pressing for disclosure, but there are lots of others. Institutional investors now are putting concerted pressure, particularly on heavy emitters, to release more information about the climate risk they face. There's much more pressure on supply chains. So there's a law that's likely to go through this year in the EU, which would impose new due diligence requirements on companies, look into their supply chains, look for environmental and human rights risk. So they're going to start having to ask some penetrating questions, and which will have a ripple effect. Insurers and banks, because of regulation, they are going to be forced more and more to ask these questions of their customers. Rating agencies are pressing and so on. So there's this pressure to be more transparent about this. And then you've also got developments in technology. So just reading in the last week, some researchers developed a tool called Climate BERT. They trained it on some companies' TCFD disclosures and then set it loose on another 800 companies' disclosures. And it came back with some quite granular information. And essentially the score was could do better, could do radically better. And it's the increasing volume of data and the ability to interrogate it, I think, is going to be a really dominating theme. But it's also then going to enable all sorts of good things. I think it's going to accelerate the transition in particular. It's going to help surface and price risk, so you can actually create a market. So I think that the range of risks that are actually within the insurance domain could expand quite dramatically, because you get both sides of the equation. You can then see the same data, the same interrogation, and can form a view on how to price that risk and what their appetite is.
Thank you. Matthew, anything you'd like to add at this point?
No, that was as good as it gets.
Great. So I suppose it's fair to say we've been quite a UK, US, EU sort of orientated conversation, and there are very different disruptive insurance business models coming out of China, including parametric insurance. Will these have global impacts, would you say? Who would like to start on that one? Nigel, thank you.
Yeah, there's some fascinating stuff going on in China, and I think data and interrogation of it is a big part of that. China has perhaps more relaxed data privacy standards and so on, and you've got a much greater adoption of electronic means of finance, shopping, etc. So they've got a massive data set that they've been able to train on. The large, and of course the very largest tech companies in China are massive. So they're the tools they've developed, in particular, including the insurance industry, where there's some extraordinary innovation there. There's a kind of Cambrian explosion of different kinds of insurance, kinds of risks that we don't get insured over here, but are insured over there, and there is a market for that insurance. And I strongly suspect that methodology will be brought over, and it will have a transformative effect in other markets.
Thank you. Connor, any thoughts?
Well, thanks, Catherine, and this is an absolutely fascinating question, because there's so many ways to unpack it, and I think for the IIS, one of the things that we've worked a lot on over the course of the last decade has been on supporting greater access to insurance. We, as a supervisory body, recognize that insurance has an important role to play in terms of financial inclusion. And we've done a lot of work in this space, supporting supervisors to understand really how to balance the prudential objectives that they have, the conduct objectives that they have, but at the same time to support ways in which the insurance industry can address some of the incredible demand that's out there for appropriate risk management tools. And I think from where we sit, we've been very fortunate. We worked very closely with the German government and the Dutch government to establish what's called the Access to Insurance Initiative, which is a very innovative partnership between the supervisory community, the development community, as well as policymakers, to really look at ways to, one, make sure that financial inclusion is recognized as an important part of an overall inclusion strategy within a jurisdiction, but two, also making sure that supervisors were well equipped to be able to balance those competing objectives that they have. One of the things that I think years of progress has shown us in this space is that there's an incredible amount of innovation that's possible within the insurance sector. I think that it's important, though, to recognize that many of these innovations are taking place in ways that there are risks. Parametric insurance being the one that was brought up, just in terms of making sure that we address the risks that are associated with parametric type products in a way that contributes to overall trust within the industry, make sure that losses are indeed compensated, that we avoid basis risk, that we avoid some of the challenging pieces that come along with those considerations. And I think that what we've seen is great progress, but at the same time, I think we need, as a supervisory community, to keep our eye on the ball insofar as making sure that we keep those prudential and those conduct objectives in mind, and that we continue to put at the forefront of all of our supervisory actions the protection of policyholders. So yes, innovation, great. It's amazing to see, but I think it's important that we recognize that it takes place against a backdrop of really those fundamental objectives that supervisors have, and making sure that we continue to ensure that policyholders are well protected.
Thank you. Gabrielle.
Yes, and maybe if I could just bring out one of those points around, Connor, you mentioned financial inclusion. I think this extends beyond just the direct customers of the insurance policy, because it's not just about innovation and that particular customer. As insurers, I think the sector has to think about whole communities oftentimes. So communities that might be in a high flood region, for example, or communities that are exposed to other perils such as wildfire or earthquake, and actually even communities that are part of industries that will go through significant transition. It might be communities that support specific oil fields that have specific geographic locations. So I think as a sector, we have a responsibility to just understand the impact of how we innovate and the impact it has on communities at large.
And Matthew, did you want to add anything to this?
Yeah, it's interesting, isn't it? Because I'm finding myself nodding, but there's another part of my brain sort of fizzing in terms of, at its heart, insurance is a pricing of risk mechanism based on a pooling of risk. And I think, this is a richer conversation that we don't have time for now, about where the natural legitimate limits of the insurance industry meet government and meet a broader range of stakeholders. And I think, candidly, one of the challenges that we've had in a pandemic focused world in 2020 and 2021 is a mismatching of expectations of what the insurance industry does and can do and what it doesn't or should do. And I think that I by no means have all the answers to that. But one of the challenges, I think, that we've got to be very honest as the insurance industry that for all the value we can bring, where the natural limitations of that bump up against unrealistic expectations, because we're going to get in a mess otherwise for the customers, absolutely, as well as all of the other stakeholders.
Thank you. What I'd really like to move on to, with just over 10 minutes left to go, is what is particular about London? What is special about the London market? Why is it that London holds an advantage in this area? Is it the scale that we have here, the expertise, the regulatory framework, our tendency to adopt innovation or take innovation forward? what is it that you would say? I mean, speaking as the custodians of the square mile, we like to say that we've been active in this space since the Great Fire, where people got together in their whatever remains to talk about how to cover risks for the future, and we've been at the forefront, we would say, of insurance ever since. But am I right? Who would like to come in on that first? Matthew.
Yeah, I feel I should sort of lead the charge as chair of the London Market Group, and I do think you're right. And I think though we have to be very thoughtful about how we analyse that and articulate that, so it doesn't fall into sort of hubris. Why do I think that assertion is correct? Well, you know, I think what this conversation and what indeed this whole conference has done is it's kind of says, well, you know, what are the problems we've got to face, and kind of, you know, how will we do that, and when, because there's an element of when we'll do that, you know, as part of this evolution. But some of it is, where are we going to do it? You know, how does this thing happen? Where's most likely to come up with solutions? And I respectfully sort of say that it should be London, and it should be London because the sort of specialty innovative products that require deep pools of capital, that are flexible, that can quickly, you know, find products to support that meet emerging customer needs. Now you've got a deep pool of talent in London, of international talent in London, in the sense that so much of the business that comes to the insurance broker community both gets placed inside of London and the UK, and also externally. This is not a sort of nationalistic approach by London. It is really facilitating a global approach, and London is the most global international hub for specialty insurance and reinsurance. And guess what? All of the problems that we talked about trying to solve are global problems. They can't be more global. You know, it's energy transition, it's climate change, it's non-modeled perils, it's pandemic, it's cyber. Almost the definition of challenges that go beyond national boundaries. And in that sense, you've really got to look at London as this, you know, for historical reasons as well, any other, that can pull together that deep pool of globalized talent, capital, innovation, product. And, you know, we've got to live up to that challenge. You know, I'm convinced of it, but actually it puts a responsibility on us, and one that, you know, does give us a great opportunity to be able to fulfill our obligations.
Thank you, and I'm very glad you stressed that international word, because I think we do need to remember that what makes London the opportunity that it is the global business that we host, the global customers that come here to find their solutions, and the access that we have to an international talent pool as well. Connor, what would you say on this question?
Yeah, maybe Catherine, what I would apply is maybe a sort of classic paradigm that I think HR people think about when they're confronted with new innovations within the industry that they work in, and that is, you know, how do we upskill the people who are working in it? How do we bring on board the talent that we need? And three, how do we partner with different people who might be able to help in terms of contributing expertise as we need it? And for us, we're, of course, an international body, but I think it's fair to say that there's really, within the UK setting, there is a remarkable amount of intellectual capital. One. Two, there's an incredible amount of financial capital, and I think my fellow panelists are much better placed to talk about these two things. But I think it's fair to say, even to an outside observer, these are definite strengths of the London market. But I would also say that there's an incredible amount of policy capital, and what I mean by that is, you know, we have a partnership with an organization that's been convened by the United Nations called the Sustainable Insurance Forum. Anna Sweeney, who I think is familiar to many people who work within the insurance industry within the UK, she's the chair of the Sustainable Insurance Forum. And we work quite closely with them in terms of thinking about issues around sustainability and the supervisory perspective on these things. But I think Anna's credibility is not only because, of course, she has a senior leadership role within the Bank of England, but I think it's also because the UK has really taken a leading role on this topic. And the way in which they've been able to contribute and help to shape the debate, I think, is something that, you know, as an unbiased observer, I think is nothing short of remarkable. So, you know, effectively thinking about the global talent, the UK has so much to contribute in terms of the expertise that exists within London. Two, of course, thinking about bringing more people into it. Naturally, these are hubs where it draws in talent, and people who want to contribute to the industry, want to confront some of these major global policy challenges that we're facing. They want to be in a place where they actually can make a meaningful contribution to it. And again, London checks a box there. And then three, thinking about the partnership side of things. We see with the Insurance Development Forum that Nigel's very involved with. We see with the leadership role that the Bank of England has taken with the Sustainable Insurance Forum, many of the developments that are taking place in terms of thinking about climate risk are happening within the UK. And I think that this is again people who are looking to understand the sort of leading thinking around issues on sustainability, addressing some of the issues around resilience, making sure that some of these perils are addressed. They really do, I think, from where I sit, they do look towards London, and they do think towards the insurance industry within the UK and the broader policy community that exists around that when they think about understanding sort of best in class or leading thinking in this area. So it's a hard question, Catherine, for me to, of course, opine on, because I'm not a UK native. I come from an international organization, but these are my personal reflections.
Thank you very much. And I know that a guillotine falls on us in 4 minutes' time. So apart from the insurance sector itself, the fantastic range of professional business services, supporting services that we have access to in London also really helps, I think. So 1 minute each for Kabari first, and then for Nigel.
Yes, absolutely. I think very briefly, from a practical perspective, I can honestly say we are approached, and I sit in the London office of EY. I'm approached by global clients who are headquartered outside of the UK to understand how insurers, and primarily the London market, is addressing all of the climate requirements that the Bank of England has issued. So, that's the kind of real example that we're facing and have been facing for many months. And then the other aspect that I think really speaks to the strength of the London market is that many insurers that are headquartered outside of the UK and have operations globally, if they have a hub in the UK that is undertaking an analysis for climate risk and standing up a framework for climate risk under the Bank of England, many of those companies are using their UK operations as their engine room. So designing it in the UK, in the London market, and then applying it to the rest of their global operations. So, there's no greater credential, really.
Thank you. 30 seconds, Nigel.
Yeah, I'd look at geography. So if you start from Lloyd's, perhaps as the kind of centre of geographically, the centre of the insurance market, most of the world's insurers are within walking distance. They're their London presence there, as is the Bank of England, as is the London Stock Exchange. Wander a bit further, and you've got one of the world's leading fintech hubs up in Shoreditch, which is integrating closely with insurance and banking. It's one of those things that feeds off itself, so that it attracts in a lot of the world's experts because you've got that confluence. And that's to say nothing of academia. We've got world-beating knowledge on climate change and sustainability and so on, which is on tap, a lot of it actually in the London universities and the rest nearby in Oxford and Cambridge and Reading and so on. All of this feeds together. There's really good integration between these. Plus you've got world bodies. The World Bank set up its disaster risk fund in London, and that was no accident.
Thank you very much. So look, with 1 minute to spare, I just want to thank my fantastic panel. We could have carried on for another hour. I hope we've given people a flavour of London, not only as the birthplace of insurance, but also as the future place to tackle global risks. Thank you so much, everybody. In fact, I have a little bit longer. I can carry on for another 30 seconds. No, I really hope that's given people a flavour of what London has to offer, besides tackling some of these really significant questions around resilience and how to close the protection gap. Thank you all very, very much. Thank you all for listening. Thank you.